I think the general view, which I happen to agree with, is that both sides want to get a deal. You wouldn't be at the table, you wouldn't have so many people spending so much time on this if both sides didn't know it was in their best interest to get a deal. Donald Trump wants a better deal, but he's, on this point, not a dummy. He knows that trade is important to the U.S. He knows farmers need to sell goods. He knows there are a lot of voters in farmland. So he wants to get a deal done. I think people think eventually we will, but the next couple of months could be very bumpy.
Okay, so you're saying it's not because they don't think there will be damage. It's because people think there will be a resolution and maybe these tariffs come off. Barry, do you share that optimism?
Well, it's kind of twofold, I guess. There's inflationary and deflationary pressures that come from the tariff situation, like Kohl's, which is having a little bit of problem with their prices, would have to raise prices 2.5% to offset the tariffs. We've seen a fall in the whole area of the major exports from the agriculture area, more than 50% since 2017. So there are pockets that are really getting hit hard, including some of the semiconductors and some of the companies like Intel, which has 25% of their income coming from China. So it's a hard thing to really pick which stocks are going to do well and which ones aren't. And the way we're looking at it, it's best just to kind of avoid those things that really have a major China impact and stay with things that are focused here in the States.
All right. So then, Andres, as you try to game this out, where do you think, like Charlie says, that we are still headed for a deal, and so investors have the hopium that Bob Pisani's been talking about, or is it that they're saying, okay, even if these stick, that we've already repriced for that?
Yeah, so if you look at where the market was last week versus where it is right now, basically we're flat before this Monday's bloodbath. So I do think that the market is essentially saying that the probability of something going wrong is the same as it was last Friday. And I think from that perspective, it doesn't make sense to me, right? Like the risks did go up.
Exactly.
You could say that the probability of the deal happening is still more than not, but the risk did go up. So I often look at what not just the equity market's doing, right? So the credit market did sell off in Monday. The equity market has bounced back more strongly than the credit market. So I'm looking at what other asset classes are doing.
So you see the drop in bond yields, for example, saying, pointing to more damage than equity.
Yeah, I mean, the equity markets, we tend to be more optimistic in general. So I do tend to see if the bond markets are following. And I think the bond markets kind of read it a little bit more of how I would read it, which is it's still likely that a deal will get done, but the probability of success has dropped a little bit than last week.